Welcome back, everyone. Today is all about meme stocks, particularly focusing on GameStop. What's the deal with these stocks that suddenly skyrocket and make headlines? Today, we're going to dig into the hype, the mechanics, and the impact on both individual investors and the market as a whole. Meme stocks are a fascinating development in the world of finance. They're usually companies that have caught the attention of retail investors who frequent social media platforms like Reddit. These aren't your average stocks. Meme stocks often see erratic price changes that don't correlate with the financial health of the company. The discussion forums serve as echo chambers, amplifying both facts and rumors. In some cases, these stocks soar for no apparent reason, creating a kind of gold rush atmosphere among retail investors. The most interesting aspect is the crowd psychology that's at play here. It's like a game of chicken where people hold on to see who blinks first. What's even more surprising is how meme stocks have managed to captivate not just individual investors, but also the media and Wall Street analysts, who often find themselves puzzled by these unexpected market movements. These stocks challenge the traditional notions of investing by shifting power dynamics and questioning who really controls the market. Additionally, they expose the gaps in conventional financial theories, which often can't explain the surges and falls in these stock prices. Finally, the rise of meme stocks has also drawn attention to the potential for market manipulation and the ethical considerations that come with it. The poster child of meme stocks is, without a doubt, GameStop. Early in 2021, this video game retailer's stock price skyrocketed from about $20 to almost $350 in a matter of a couple of weeks. A large portion of this surge was driven by retail investors who are congregated on the subreddit r/Wall Street Bets. In the case of GameStop, we saw the democratization of the stock market. This wasn't really Wall Street manipulating the stock. This was an army of retail investors. They utilized options, leverages, and their sheer numbers to drive up the stock price. It became a mainstream event, attracting the attention of media, regulators, and even Congress. What set GameStop apart was how it mobilized a community of individuals to rally against established financial institutions, flipping the script on who holds the power in stock trading. The event became so big that it led to congressional hearings where key players like Heath Gill, also known as Roaring Kitty, and hedge fund managers were called to testify. Not only did it question the ethics of short selling practices by hedge funds, but also shed light on the limitation of current financial regulations. Furthermore, the GameStop saga has inspired a slew of other attempts to pump various underdog stocks, creating a new genre of investing, often labeled as populist investing. This phenomenon has been a wake-up call for many, leading to discussion about the need for regulatory changes to adapt to this new landscape. Several factors contributed to GameStop's virality. First, hedge funds had taken short positions, effectively betting the stock market would decline. Retail investors seized this as an opportunity to stick it to Wall Street by driving up the price. Then there's the role of social media. Reddit threads and tweets were rallying cries. These platforms enabled a form of mass mobilization that was never possible for in the financial markets. Moreover, influencers and high-profile endorsements added fuel to the fire. Celebrities like Elon Musk shared tweets that further electrified the investor community. In this new age of investing, the power of a tweet or the Reddit post can be underestimated. They serve as catalysts that can move markets within minutes. Additionally, the snowball effect came into play. As the stock gained attention, more and more people jumped on the bandwagon, which further accelerated its growth. The use of memes and catchy slogans like "to the moon" became cultural markers, making the event as much of a social phenomenon as a financial one. The mainstream media coverage also intensified the FOMO, prompting even those unfamiliar with the stock market to consider diving in. Lastly, trading apps like Robinhood made it easier than ever for retail investors to participate, democratizing access to what used to be a walled garden for elite investors. I'm gonna be real. Investing in meme stocks is not for the faint of heart. First off, they are volatile, extremely so. This isn't like investing in an index fund where you can expect gradual growth over time. Meme stocks can fluctuate wildly within short periods, and if you're not careful, you can lose a lot. Another risk is FOMO, the fear of missing out. Social media amplifies this by making it seem like everyone is making easy money, when the reality is much more nuanced. The unpredictability of meme stocks also makes them difficult to evaluate using traditional metrics like PE ratios or dividends. Finally, regulatory actions could swing in any time, affecting stock prices unpredictably. What does the future hold for meme stocks? Opinions are divided. Some financial experts argue that the GameStop episode was one-off even, a kind of financial anomaly. Others believe it's the beginning of a new era of investing. Retail investors now realize the power they hold when they act en masse. Technology, particularly social media, has leveled the playing field in unprecedented ways. Whether meme stocks are a fleeting trend or a fixture in modern investing is yet to be seen, but one thing's clear: the old rules no longer apply. That's it for our deep dive into GameStop and meme stocks. This phenomenon has jolted the financial world and has led many to question the very foundations of investing. Whether you view this as a new form of market manipulation or the democratization of finance, the impact is undeniable. Just remember, the stock market is always a gamble, to some extent, so invest wisely. Thank you so much for watching, and I'll see you guys next month.